Hey everybody, it's what 13:30 UTC on Wednesday the 29th, and today is the day we are at the next federal interest rate decision. So it's gonna be a wild one. It's gonna be fun. No change expected, and they usually hold towards that 4.5%. If by chance they end up lowering it, you're going to see a major reaction off of the markets because the markets have priced in no change. If they do, it'll be probably directly caused by pressure from the Trump administration. But in any case, that is at 19. I know it says 20 here, but I'm +1. So 19 tonight. We're going to get that interest rate decision followed by the FOMC press conference after that. Tomorrow, pre-market is going to be pretty volatile. We've got ECB as well coming out with their interest rate decision. They're expected to lower by 25 basis points, as well as US GDP and initial jobless claims. But again, this is the big one that matters. Either way, I'm expecting some volatility, even with a flat rate decision. It's usually just a high volatility event. On the long short ratio specific to Bitcoin right here, we're going at a nice downtrending part of short still coming into the market aggressively. Overall, it's been pretty good. However, in this last little move, since we've been breaking down in the last hour or so, we've seen a little bit of an increase in longs in general, but we are still majority long in the market. Remember that. So max pain is potentially down locally. On the funding rate side, we are back closer to 0.01, but just underneath it. Some outliers for funding, BitMEX at 0.01, so they're back at their standard. In general, there's just some neutral / bearish, slightly bearish funding. Remember, positive funding rates influence liquidity providers to take shorts, negative to take longs to fill out the order books and on the futures market. So on the liquidity side, yeah, we've been pretty much in a flat since we made the move down. There's a lot of stuff building right above us to about 105, where we then have a little bit of a local dead zone. Effectively, we have local liquidity that isn't a whole lot, but all the way up to about 11,000 if we can get over that 105. If we do have a sweep to the upside, I think we should target 105 and then potentially reject from there. We'll see. But on the lower time frames, or I guess on the higher time frame, but looking at it with that liquidity being a lot less relevant, is, yeah, basically just this little stuff above us. If we go do that sweep to 105, that should be a potential stopping move because it's quite thin, maybe even just short of 105, because there's a CME gap that gets filled here as well around 104.7-ish. On the USDT chart. I think on the CME it's 105.1 is the actual CME gap fill. But beyond that, we still have a lot to do to the downside. The liquidity below us is still good. I think we'd all like to see another leg down and then a major hold, right? Because it is a very big liquidity dead zone underneath, 93, getting down into 92, 91, where there's a lot of support to potentially hold the price as well. So with that, looking at the order book, just to show where everything's stacked, there's a lot of ridiculous messing around with it yesterday. Came up right to the highs here at 103K. They put in a big blocking order that pushed it back down. Released the pressure, another blocking order, push it back down. And there's been orders stepping in all morning, really, just to push price down a little bit. The stuff here also has been mostly pulled. It was about 535 Bitcoin right at 101.5. That's been pulled by about, 350 Bitcoin-ish. So there's some stuff stepping in below it. We'd like to do the higher low here, obviously. And yeah, there's still stuff stepping in the last hour or half hour or so, which is good locally, right? That might prevent a further breakdown. If you look a little bit higher time frame, the stuff here is pretty thick, but I would expect that if we come down to it pretty aggressively, we actually rip through this liquidity that takes us back down to the giga hold. And it looks like everyone's layering in to hold 90K at all costs. So either way, that looks good, kind of like as a potential local bottom if we do have a continuation breakdown. One thing also I want to look at was the delta for the order book liquidity. On the spot side, it's inching back into the green, so there might be some turnaround. It's nothing too crazy. Realistically, what you want to see is both the top chart here, which is spot, and the bottom chart, which is perpetual futures. You want to see both in green or both in red, which will definitely give you a better direction of the overall volume and what direction the order book is kind of taking you. But for right now, it's relatively flat and neutral. You've got a little bit of long perpetual stepping in here, so we might actually get a bit lower since we don't see anything positive on the spot market side yet. On the whale and large orders, I like this one a lot too. There's still quite a bit of stuff resting up here. as potentially to try to hold us down, this 103K. If we do get a pressure release, we should fly back up to like 103.7, where above us it gets really thick around 105, all the way up to 106, where we'd expect us a major stop. But in general, it's still pretty thick below us in the local stuff, and then getting down to, 90K and 91, 92. That's just overwhelmingly large orders resting across the board. Nice little tool, especially given that we can see exactly when there was massive forced sells, even going into the weekend, pushing price lower across the board into the Monday open. So with that being said, looking over at the chart itself. So one thing I want to point out here, because I think it's an important discrepancy, we broke up, we had a big, strong hold of the high move, grabbed that liquidity, and then made a down move. We're still kind of trending upish. I don't like that close. It kind of broke some of the local stuff since we're making a lower high here. But in general, we're still kind of holding in the upside direction. That goes out the window the moment we lose 101.3 again. It forces us to come back to 100.2 or 100.3. And we kind of go from there. I think we might just run a little bit flat. We'll see what happens on the open of the market. Realistically, there's liquidity above you in this area, right? It's been holding us down effectively. And there's a CME gap fill. Yeah, 104.9-ish. So if we do have a move up that starts to regain and create some higher highs, just to see a rip into this structure before we could potentially get pushed back lower. Any gain of 105, and you go straight up into our kind of golden zone, 107, 108, stuff like that on the higher time frame. To the downside, like I said, there's a lot of liquidity building right underneath the local structure, which if we lose, I think we just kind of like nuke through the December open and this level, and it takes us right back down towards 94, 93, and kind of like the major hold of structure where we want to see significant buybacks across the board. But for right now, you've done nothing more than lose a local little pop back to the downside that lost some upside structure, but it is significant since you made a lower low off of regaining levels, and then you made a lower high. So if you do start to fail stuff again, I would expect if you do start grinding off and losing the weekly open, you probably should just kind of grind off a cliff and grab that liquidity, at least on the local side. So in any case, the number one thing to look for is we're a couple of hours out of the FOMC interest rate decision. It is right here. So I'm on UTC. So yeah, it's 19 UTC. Is when that decision comes out. So make sure you're watching it. It might not be the worst idea to deleverage a bit in case you get some big volatility wicks. And one discrepancy that I was mentioning before is that even though the USDT spot looks fine, like it doesn't look great, doesn't look terrible, it's kind of middling. We're waiting for this kind of major volatility event to clear out before we get some better direction. The one thing I will say is that on the CME, right, the BTC1 exclamation mark ticker, we've actually made a pretty significant change as compared to the market spot. So this is actually gaining stuff back at the moment. It made a new high, it's made a higher low, and the structure is wildly different. The only major difference being is that it's got a bit of a intraday gap below us that could be filled really aggressively and really quickly. So if we do continue to lose structure levels, we could be testing that low again, run it back up, and then we see what happens. But this is a very interesting discrepancy, especially given that the premium on this is quite high. It's about $750 higher than the rest of the Bitcoin market. So Bitcoin USDT is trading around 102,000. On the CME, it's trading $750 higher, so at a premium. So just keep that discrepancy in mind. Again, my recommendation is do what you gotta do, but watch out for the volatility event tonight. And that is that. Take it easy, and I will catch you tomorrow.